Okay, very good evening to everyone. Welcome to the video recording, Lim and Tan client sessions, 12 November, January 2021. Okay, so we're back to the normal time slot where for the past two videos, I have been sending out the videos in midnight. So thank you for viewing the videos. So let's take a look at the market. We're looking at STI, we are looking at the sectors as per normal, and then we're going to talk about some stocks that may potentially move up for the next few trading sessions. Okay, so first of all, I'd like to congratulate those who have been invested in the banks and the tech sectors, as I've been covering these sectors for so long, for so many sessions. And as mentioned, in the month of January, we are in a bull market, and then the market has been as bullish as ever, despite that there's so much chaos in the Western world. Okay, so where are we going to be for the next half of January? Hopefully, the bullishness will continue. So there are some levels that we're supposed to watch, and let's take a look at STI now. Okay, so let's very quickly go to STI. So as you can see, STI broke out strongly over here, a very nice white candle form, and the pullback is also very nice as you pull back slowly and slightly forming a flat pattern, very similar to flat pattern. But of course, flat pattern doesn't end here. It can continue for a few more candles before it really break out and go up higher. So what the STI got to do is it has to break out from certain level. So the STI important level to watch out for is this. We want to see it break out from this resistance at 2994. And after that, we have the last year resistance to challenge, which is around very close to this 2994, is about 3050. And then after that, we will have a 3108 resistance. So if STI can have a very nice breakout over here, it will be fantastic. It continues the bullishness into January, but we shall be watchful once STI start to test the next resistance, because when STI is bullish in the month of November, December, and January, the observation in the past is February, we will potentially have some corrections coming in. I remember back in 2006 when I started trading in the market. Okay, the market was so hot, it went as high as I meant all-time high. So then it came in February where the yen carry trade happened, where the market suddenly crashed by more than 2%. And I was in fact studying the market, learning how to enter the market back then. So just like to show you, so you can see the market was very bullish. November, December, in fact, the whole year of 2006 was very bullish until we start to see corrections in February, then bottoms up in March, and then we can start to see it start to resume back to its upwards movement. So as mentioned, now we are in fact in the bullish momentum now. So back to where we are right now. So let me just scroll the chart, go all the way to the front. Yeah, so if we end the month of January at the high at 3108, so we got to watch very closely for February. So if February you continue to go rally, of course, as it goes, definitely in the year, there will be one or two corrections. So if February don't correct, March don't correct, then April correct, definitely we got to have one or two corrections. So this is where our strategy will comes into play, when corrections will comes in, because when corrections comes in, 5% or 10%. So if it goes 10%, then this is where we have an entry into the market again. But for the time being, don't hope for or stand aside and hope for a correction to come, because it may not come. So if you realize that most of the time when you expect a correction to come, it doesn't come. Just as like when I mentioned that I took profit on my banks first, and then anticipate a pullback in December before the January rally. It did not happen. In fact, the market just hold very well at support level. It held at the support level firmly before it started to wear up. But it's okay, because after I've taken profit on my banks, I did not sit there. I actually reinvested the money into some tech counters, and I'm going to go through these counters later on. So we are looking at the banks first, since it is so closely related to the STI. As you can see, STI chart is very similar to the bank. You can see DBS broke out strongly. As I mentioned last week, I saw DBS chart has turned so-called good or bullish already, because it has gone above its 20-day MA. So this is actually a sign by the market, from the market, and then giving us the clue that in fact there are some bullishness that are coming in, right? Akan datang. So what do we have here? Of course, you might think that this may not happen when you see a black candle below the 20 MA, but the next day when this happened, it actually wiped out all the sellers over there, and there you can see that in fact all the shorties has been barbecued, very badly, as DBS rallied strongly to $27, almost to the in fact above the pre-COVID days already. So it is really unbelievable, because having on this COVID situation, which hasn't been really settled, the bank has really outperformed. So I mentioned many times I like OCBC. The chart looks better than the other two banks, and then we do see that in fact OCBC also had a very strong breakout right above its resistance over here, and then went to multiple resistance. So so we can see that although despite that there's some pullback, the volume is actually not very high. You can see DBS volume is really low. UOB broke out also, pullback, volume pretty low. UOB in fact is already at support level. So for those who are really into the banks, can start to right, in Hokkien we call it bio, start to look at this UOB at this with a hammer patterns. So if you were to look at last week videos, I don't know whether I did mention this. I think I did. So I mentioned that nowadays, if you observe the market, they move by sectors by sectors. You don't see one counter in a sector that is very bullish, the rest are lagging. So in fact, it's so true for our banks. So you can see that DBS, once they rally, OCBC rally, they break out all together with the strong white candles over and above its resistance. So you can see that if UOB can rebound from its support level, OCBC is likely to break out from its flat pattern. And then we have DBS breaking out from its flat pattern as well. Again, very similar to STI, this is just the beginning of flat. If we need to see if there's no breakout, there is a continuous light volume selling and not going lower below the support level of DBS. So like for example, DBS support level is here at 26 to 26.44. This is a gap support. OCBC support level is at 10.34 to 10.46. Of course, this is a recorded video, so if you can't remember all these support level at one go, you can always rewind and go back and then just take a note and then note it down. What are the key support levels that you're supposed to look out for? UOB, the support level as I plotted, 23, 27, 23, 54. And of course, resistance to mark over here for this DBS is over here. You can see that DBS has a high around 27.43, then followed by OCBC having a resistance at 10.74. Okay, then followed by we have UOB. Finally, we have UOB here breaking out from 24, 22, resume its bullishness, STI continue upwards higher. Now, of course, there are a lot of people calling out for a correction, a strong corrections, because the US market all-time high, and the correction has to come so that the market can go higher after this correction. But like I say again, do not sit around and just wait for the corrections to come, because sometimes it may not come. Like I mentioned, in November, I was waiting for some sort of corrections before the end of December bottom up to rally up higher. I do expect end of December to be bullish, January to be bullish. So far it's true. It's just that before that there was no correction. So so this is one thing that we cannot accurately predict. Now let's go to the tech sector. The tech sectors begin with last night when AEM announced that they are going to take over CEI. So CEI is one of their competitors, and then now they're taking over them, making them a cash offer, 15% higher than their last traded price. And this sent a bullish wave to the market, especially to this sector. As you can see, AEM broken out from its resistance. Because if you were to read the announcement from the AEM that they have released, you can find that they actually compiled that after the merger or the takeover acquisition took place, you can see that their EPS, earnings per share, actually has gone up. So this is called an accretive. So this accretive acquisition. So this means that it's good, right? And they are not paying high. They are only paying 15% premium. So the market will like it very much, as you can see what happened to the tech sector today. So you can see AEM broke out from its resistance. And then we can see that the next one that it may be testing, which is very soon, because it is very close to that, is 387, then followed by 395. So once it conquer 395, the next important key resistance levels is around 419. Okay, so do watch out for this resistance level. UMS has also broken out from its resistance, as you can see from the chart. Yes, I right click over here. You don't see any resistance, so it means that UMS is actually at all-time high. So UMS has managed to close at 120, and this is a very good sign. So if UMS were to continue higher, let's do a projections over here, see where can we see UMS going forward. So we have a projection here to 170. So if this kind of momentum, 117 rather, this momentum were to continue, we are looking at 132. These are projected levels. It doesn't mean that it's going to go there. And not to forget the result is some companies are announcing result. I'm not sure whether UMS is going to announce. Got to call them and check. Why for the past few times I've been calling them, they have been on a stealth mode. Always they don't tell you when they're going to announce result. You have to call them. I think I did call AEM IR before as well. So, but nevertheless, whether result, no result, technically they are strong so far. We shall see whether how far it can go. So for those who are holding UMS together with me, do write the trend and see whether we can get the max profit out of this. Then we have Valuetronics. Fantastic. I did mention last week I like the chart of UMS, right? But I say that I did mention that Valuetronics is a bit slow and weak. So today it actually shoved the whole thing back to my mouth, the words that I've mentioned. So today it broke up strongly with the volume extremely high above its resistance at 61. So this very strong white candle, if it really can follow through this buying, the next resistance that Valuetronics can go it's 68, so it probably will break through 68. Now a lot of people ask me this question, hey, today can buy Valuetronics or not when it was trading at 64, 645. So from my experience of trading Valuetronics, especially those who follow me to trade Valuetronics the last time, in fact, enter a position, some clients were asking me as well. So I shared, okay, I also entered, and then they also like to place their own trade. So some of them even entered at 60 cents and then we waited for Valuetronics languishingly trading at 57, 58, always every day the same thing, never move at all, probably falling asleep already. Finally, we wake up together. So thank you for the patience of holding Valuetronics together. And now we shall we shall see that if we can test 68 resistance, then the next one will be 70.5. Okay, so this AEM takeover sparked the rally in the tech sectors because there are some speculation that maybe some other consolidation is going to happen as well, like Valuetronics is going to be privatized or take over whatsoever. But again, my experience is I never would like to trade Valuetronics on a breakout because, like I say, it may fall back asleep again. So just wait for some other signals to trade. So whether it's going to this is a flat fall already, so it's going to be forming a flat pattern successfully, or is going to break out 68 then form another flat pattern. We have to watch. Okay. Frencken, interesting. Why? Because Frencken resistance 1.36 tested again. You look at MACD and stochastic, fantastic. The trend is up. But the only thing with Frencken is there is bearish divergence. So bearish divergence means there might be a potential change in trend. Weakness in this uptrend has appeared. So whether Frencken can follow through with the rest, or it will be swinging up and down between 128 to 136 by itself. This is very important things for us to watch going forward. Other than that, if you like to have a breakout trade, if you like to follow through breakout trade, Frencken breakout trade is above 1.36, and the volume, if it's the same as today, it is really very fantastic. Okay, so let's see whether Frencken can break out and negate this bearish divergence. We are looking at these very strong sectors, and really that if they can follow through the buying tomorrow or the rest of the week, well, these sectors are going to test their next resistance. So do watch out. Okay. Before I cover other counters, just like to touch on the glove sectors, as I usually always do, although I did declare that I am not in appetite, I'm not into the glove sectors. Okay, so I just like to highlight to you, we do see some bullishness for the past few days for the glove sectors, especially because Malaysia has just declared MCO and also the state of emergency. Okay, so as when that happens, of course, the market's anticipation is the glove is going to be in demand again with so many cases that are going on. Malaysia surging new high, Japan surging new high, everywhere is surging new high. Thank goodness Singapore, keeping the numbers low. Thank God for that. Okay, so so we can see that the top gloves above is 200-day MA, above is 20-day MA. Hovering above is 20-day MA, very good, but is hovering below is 50-day MA. So for those who have top gloves, do watch out for the 50-day MA. So you got to pierce above this 50-day MA in order to go further. So the challenging levels will be 230 onwards to 245. Okay, because these are the zonal resistance. So what happened is that Top Glove is going to come out with a special dividend going forward, and some clients shared news with me that they are chairman has been scooping low when Top Gloves was trading at $1 plus. So well, that is in fact a good positive news for the chairman to buy more. But still, we got to watch for the resistance, and yeah, and hopefully this is not a definitely not a what we call mel jump or dead cat bounce, because over here you can see that it actually come back to test its previous high. So this is the first sign that not a dead cat bounce. Okay, so the next sign of not a dead cat bounce is it must break out. So first sign is not enough. You need to break out and then retest the resistance and then test back support and rebound and then go higher. So if Top Gloves is bullish, what about the others? Of course, you can see here, I mentioned last week that Riverstone is forming double bottom. You can see a double bottom here. Over here, we have the double bottom, then the breakout, and then now we are looking at it going to its 100-day MA, because it has pierced above its 200-day MA, and once it clears its resistance 142, while we have it testing 158 resistance. But this, of course, there are people asking me whether should we buy into this gloves, but these signs are not the optimum entry signs for the gloves counters if you are really interested to trading it. So in fact, Riverstone entry was at 122 when it break out from this resistance. I didn't highlight in the email because like I said, I'm not into gloves, but personally you can always text me and we can always discuss the entry price. MagTech did not manage to break out from its resistance as yet, but it is not as bearish as yet. The uptrend is still intact, so we've got to watch whether the resistance can break the next few days. Okay, so you can see the uptrend line is still very much intact, right? Suggesting that this counter is gradually moving its uptrend. UG Healthcare, you can see UG Healthcare stuck at this 50 MA for the time being, right? But of course, if it can follow through a breakout, then that is slightly bullish. If you notice, UG Healthcare has also a very nice double bottom breakout over here. Then we have consolidation from the past 2 days, and once it breaks out, probably hitting 777 again. Okay. Despite so, right, I'm not going to go into gloves, but I'm going to pay attention to some other bullish sectors. Hopefully, our tech can continue to rally. And of course, talk about counters that we have been following, like Yangzijiang. Finally, right, if you remember last time I talked about Yangzijiang, when it breaks this support over here, I was saying, well, it looks absurd to me because with company announcing good results with more contract wins doesn't deserve to be on a downtrend. So in fact, true enough, it's just ripping out with hands. And now we see Yangzijiang has broken out from its multiple resistance. So its very strong resistance was 104. So it managed to hold at above this level. And the next resistance to watch for Yangzijiang is going to be 113. So if Yangzijiang can continue to go higher, today a very good closing. So next resistance to watch is 1.13 level. Okay, so so here then we can see that they have a very strong counters for the time being. So I'm still holding, looking out for a higher price level before I take profit. Right. Usually I don't sell at the very high. I sell somewhere once it starts to come down. Why? Because I don't know where's the high. So I don't make the max profit, but I make some decent money lah. So basically, we have a very nice Yangzijiang. Then Singtel, as I mentioned last week, Singtel has to pierce above its 200-day and 20-day MA conference resistance, and finally it did. And today we see a closing not as satisfactory as I would like to, because it went lower, but good thing is the volume is not high. I am targeting 260. Hopefully this is just a profit taking, and then tomorrow resume back to test back it's high again. But if Singtel cannot go to the high immediately, 250 will form a resistance, and the support level to watch is 235. So 235 will be your next entry. So here we are looking at many possibility for Singtel. So where Singtel can be, can it go straight away above 250 to 260, or it will pull back to 235, rebound from 235, and then go back, break out from 250, and then retest 260 resistance, right? My preference will be, of course, personally, it doesn't mean it will happen, is do a nice pullback to 235, rebound, so many more people can participate here, and then go back to 250, breakout, and then touch 260 again. That will be a fairy tale chart for me. So let's see whether will this be happening. Okay, so I'm going to talk about two counters that is, I think there's some opportunity. So of course, not to forget the breakout to be happening for the gloves counters is also opportunities. So we're going to look at some counters. This is a penny counter, okay, GKE. So here, this counter is on a bullish run, pull back for 3 days, today rebound. So what we are looking for is this counter to retest resistance at 0.146, and then once you break up from 146 resistance, it is going to be a bullish and continuing to go higher. So I checked the fundamental for GKE. It's not so bad. The earnings and cash are quite strong. So hopefully that if GKE can break up from 146 resistance, then we may see further upside towards 158. Okay, so the next counter that you may want to take a look is JEPFA. JEPFA is one of the counter that is in a bullish trend, rebounded from 20-day MA today, volume fantastically high, and then we would like to see a more upward movement to 96, break up from 96, then uptrend continues. So of course, if you look at this candle, it looked very similar to the Sengcorp that Sengcorp industry that I mentioned last week. So if you look at Sengcorp industry here, it also went up, rebound from its breaks above its 20-day MA, test its resistance, then pull back slightly before it continue. So Sengcorp, in fact, is going up. So congrats for those who have entered, but it's not really to our profit target yet. So we are looking for 189 to break out. Then we may see 202 projected target. Okay. Then of course, last but not really final, so I can only cover a handful of counters. So I'd like to touch on the the oil and gas. Okay, and I would like to touch on the property counters as well. So yeah, after this. Okay, so basically here we are looking at a flat pattern with a declining volume. So if San Marine can break out, right, the major resistance to clear is 177, then it may go back to its deja vu level at 20 cents, where it all begin with all the corporate action, 20 cents, all the rights issue at 20 cents, etc. So you really need to go back to the 20 cent level to do justice for those who keep faith and subscribe to the 20 cent share, and then give Sengcorp Marine so much lifeline to continue their business. Okay, so let's see whether can it break out from this flat pattern. The closing is good, fantastic. So there are some potential for it to break out. As of yet, no so-called obvious bearish sign, of course. Kappa Corp, As I mentioned, capital call has to break above its 547 or 548 major resistance, and it did. And it went to as high as 570 right now, slowly, gradually. So hopefully it can hit 580, which is our next target. Then followed by above $6, 620 will be the ultimate target for this capital call. Now, of course, this 620 is not really the ultimate target of 614. As we know, capital cop came down a long way where it was trading at above 677. So if the whole recovery continues as MACD suggests, we probably like to see it go back above $6 first. Then we see slowly, gradually, can it hit back to $7? Okay, the property. So we can see CapitaLand. I think I mentioned last few times before as well. For CapitaLand to break above 320, break above its resistance, and then so it did, and then now it is approaching to its next resistance, which is about 357. Congrats to those who are holding CapitaLand. Right, resistance is very near. So our next chance for CapitaLand is to see how it pull back. So if we pull back gradually from support level with bullish sign, we can enter again. So for the time being, just enjoy the ride. Now, CityDev today had a confirmation for the hammer pattern. Many has been asking me for this day and this day, whether should they be averaging CityDev. I have been stopping them because of certain reasons. One of the reason is because I actually asked and found that CityDev is doing valuation on the sincere investment in China, and Ernst & Young are doing the valuation. So the report will be out in February, so they will make an official announcement in February. So is it going to be good, going to be bad? We are not too sure as yet. But if it's not going to be good, then of course we potentially is going to see more downside on city development, because there will be some impairment coming, because they actually pump in 2 billion cash. So it actually significantly reduced their cash holdings for CityDev. Then of course today rebound is nice, the volume is nice, MACD is nice, stochastic is nice, right? Is this going to be a technical rebound where it's going to hit resistance and then start to pull back and consolidate at the bottom? Well, personally, I with this news in the background, I would say that this technical sign, I just take it as a pinch of salt, and then if it rebound back to resistance, I would like to see where it's going to be, because if we do have a one straight line rebound, we are not fated to trade on this counter. But if it start to form a base, a bullish base, then we can slowly scale inside this counter, and then once the report comes out to be positive, then this is where the real run will comes in. Okay, so hanging there, be patient. All right. Now, of course, other than CityDev, we do have some other bullish counters. I do see UL bullish today, but unfortunately, the closing is not as what I would like to have. So the resistance 785 not compromised, it goes below that. So tomorrow, if we can break out from 785, it will be fantastic. It will be bullish. Okay, I posted Wing Tai in my email before. If you're following the email, so you can see it's playing piano, white and black, 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 but gradually and surely it's moving higher. So you can see the ascending triangle breakout over here. You can see this breakout happens, and then Wing Tai slowly goes to its high side. Okay, so I can't remember where's the projected level. But let me just have a quick search. So we have, sorry, you're not supposed to see this. So I have an email from client to ask about how to do US trading. I'm going to reply her privately. So if you have any questions, do feel free to email me as well. So the target is 205. Okay. So here we have 205 targets at this point. So let's see whether Wing Tai can hit that. It's an achievable target, very near. Okay. So yeah. So having said that, I'd like to conclude this video. So continue on to be watchful on the potential movement from the market, especially we have the banks pulling back nicely with light volume. We have GKE rebounding, JETFA rebounding from support level. And then, of course, we also have the tech sectors that are very bullish. So let's see how far it can go. The property, generally, they are bullish except for city development due to their own problem. And then, of course, the gloves sectors, the gloves counters are pending for a breakout. Okay, so with this, I'll just like to end the video. I'll see you next week. And then good luck to us all, and then stay safe and stay healthy. Good day and good night.